Aloha, everyone. Pretty good day for stocks on Tuesday. Reversal right at the 50-day moving average for the NASDAQ on above average volume. That's a start. It doesn't mean that we're definitely done with the downtrend, and it also doesn't mean that we're going to go to new highs. It could mean that we're going to chop around. Anyone that tells you that they know for a fact that the market's moving lower in the future, someone that tells you they know for a fact the market's moving higher in the future, someone tells you for a fact they know it's moving sideways for the future, you need to go run away from that person as far as you can, because there's ulterior motives that he's trying to sell you something else with that analysis, because nobody can predict the future. It is impossible. It can't be done. I do not understand why grown-up individuals past the age of 12 seem to think that is possible. It is not. The simple laws of the universe and physics dictate that this is just something that cannot be done with 100% accuracy over and over. Once you understand how the universe actually works and how random and chaotic it is, all you can do is prepare for anything and everything and then have contingency plans for that anything and everything. So with that being said, keeping an open mind as we move on out here, this is a very noisy time of the year. It's summertime, it's earnings season. Historically, it's normally August is never really good for stocks. It's very bad. September is even worse historically. But at the same time, it's been a pretty good April, May, June, July. When it's like that for the S&P 500, normally then you have a pretty strong end of the year run. So anything's possible. We have a lot of wild cards. I mean, when I woke up today, it looked like the market was going to kind of have like a little bit of a rough open, and then all of a sudden futures jumped higher, and it's like, oh, the Fed said something. Oh, that's great. That's fun. Then the session went along, and then after hours, Apple reported earnings, and it was up good, the futures were. And then all of a sudden, the futures were down big because a certain someone loves to talk a lot. So with that being said, we have a market that's very news-driven, very wild, very chaotic. So you just have to keep an open mind here. I have some hedges in place in case all hell breaks loose in the market, and at the same time, still taking new long signals as they trigger, because overall the trend is still up. We don't have an inverted yield curve, so I'm going to keep on plowing along on the long side. So once again, the NASDAQ looking good. The New York Stock Exchange, nice move higher also with that above average volume. I definitely liked what I saw today. It's a good first sign. Doesn't mean we're out of the woods yet. And as you can see with the IWM, we're just in basically, let me go ahead and now remove those trend lines and just draw some crudely drawn trend lines here. So we're kind of just in between basically those highs and those lows right here, and we are now range bound there. Now, the one good news that I saw today, let me bring this over here really quick and widen that out a little bit. You can see, let's go ahead and widen it out a little bit more. There we go. You can see the New York Stock Exchange advanced decline line, while that NASDAQ, let's put that up again, while that while the Russell 2000 has been going sideways. You can see the most recent low here and the most recent low there. If you look at the New York Stock Exchange advanced decline line, that also held. So while the market was starting to break down, while the NYSE advanced decline line was lagging, it thankfully never broke down. So with today's bounce in the market, this line also bounced. So that's a decent good sign moving forward. We'll see what happens. Still a complacent crowd, nowhere near up at those 1.2 plus levels on the put call ratio. So, you know, my money is on the market being choppy as we move through August, September with the bearish bias. But if we can get some better trades, I'll be the first to take them, which is why we do have new long signals. Now, house cleaning. These were the stops that triggered today. I know, there's still a ton. Like I said, earnings season is always noisy. And when you have the geopolitical situation that we have right now, where a certain individual likes to create problems out of thin air that do not exist, and then takes credit for fixing those problems that were never really a problem, and then creating new problems, you're going to end up with a very volatile market that's not very sure what it wants to do. And when that's happening in the middle of earnings season, there you go. You get a lot of stop triggering. Once again today, though, the good news is the profits took care of the losers. It's just I'm making interactive brokers happy. That's about it. On an end-of-day basis, there were some 50% sell and 100% sell signals on the 50% side. VNCE below the 20. QLYS below the 50 on above average volume. IMMR further selling off below the recent support levels and 50-day moving average on heavier volume. FNJN closing below the recent low at $4, 1 cent below that low, so 50%er. TTGT below the 50-day moving average, it's a 50%er. Sale continued selling off below the 50-day moving average, but holding above this support level for now and this support level, and with the intraday reversal preventing a final sell signal. APTI, another 50%er. You would think that this would be a confirmation close below the 50-day moving average and above average volume final sell signal, but without BOP going red, it is not, because the long signal in APTI was back here. And when the long signal comes and the 200-day moving average is above that long signal and the sell up below the 50-day moving average is not breaking critical support on huge volume and or red BOP, it's never a full sell signal. So it's just a confirmation close, 50% sell signal, since we still have a 78% gain. Back in the day, I used to be like, if it's over 100%, it can't be a full sell signal. If it's under 100, it would be a full sell signal. But nowadays, 50% is like being a 100% move, so it is what it is with APTI. NOVT, another 50% sell signal. Now for the full sell signals, RXD, that's a full failure. ACER, closing below the 200-day moving average, is a full failure. NEW, that's a full failure. Thank goodness for stops, huh? PES, that's a full failure. Thank goodness for stops, huh? My final stop was hit today, intraday. Guess at what price? The open, 460. Go look at those intraday stops that you just saw me posted. You'll see that one right there. That's the final sell stop I had, was right there, right below that low. That's why I carry stops on the book. So those are the sell signals. Now for the long signals, want to make it very clear. They're all quality, air quotes, because they're from either the CanSlim quality stock scan or the stocks that are my perfect speculator scan. Now remember, the perfect speculator scan is based on what stocks normally do the best. Well, we've found historically the best stocks have already made 100% moves from their 52-week low to 52-week high. And the best time to get long these stocks, whenever they're just most coiled for further moves, is when they're in within 20% of their old 52-week highs. So with that being the case, I've got long signals in TGA, add signal in Zine, long signal in DDE, long signal in CDMO. Now, they're all risky. Why are they all then new long signals? Because CDMO, TGA, DDE, and Zine not only all made my green bot for the past 20-day scan, but were confirmed also in my max green bot for the past 5-day scan. So it's an across-the-board confirmation in all of these. They're all perfect speculator quality stocks, meaning they're the strongest stocks in the market. They're coiled to produce the biggest gains if this market does move higher. So I'm not going to just not take them. But with that being said, comparing those quality stocks, quote, quote, quality, to PGR, is night and day. PGR is CanSlim quality, highly liquid, and a higher price stock. Not the greatest technical pattern on the daily, but the weekly chart, that's bullish as can be, getting all the way back to the 2009 lows. Very nice uptrend. Very nice weekly chart. Tightening, rounding, looks coiled for a move higher. So, with today's heavier volume move, with the BOP growing, this showed up in my CanSlim scan, and then it was also my tertiary scan. Both times, I stopped and paused on it when I went through it. So PGR, with earnings already out of the way, I believe sometime back here, probably right there, this is a new long signal. It's only 1% of my account capital. Notice how it's not 10%. Notice how it's not 20%. Notice how it's not 100% of my account capital. So if you're looking for those kind of signals, well then hell, you're probably not going to be trading for a while, because this is the market we have. I invest accordingly. So by doing that, 1% of my account capital, $5,000, give or take. PGR, limit order 60.07. My first cut loss level, right there, that low right there, 59.12. Final cut loss level that I want everyone to adhere to is 58.29. Now I might get cute and do 59.12, 58.74, 58.29, and 58.10. I don't know. Depends how many shares I get long, if I can split them all up evenly or not, and how the market's looking after hours. If everything's good, then good. Now for the rest of these signals, man, unless you love them, and unless you know what you're doing, and unless you know your risk, unless you check your dollar loss per signal, You're going to have to invest accordingly or not trade at all. It's up to you. I can only tell you what I'm going to do because I do not know each and every one of you and what your personal risk tolerance level is. You're going to have to figure this out on your own or not take any of these positions. TGA, limit order, 330. First cut loss level for me, 307. Final cut loss level I want everyone to hear for is 294. But I'm willing to play with the 275, 262, and all the way back to 243 on some of this position. But no matter what, at least half of my stops are going to be up to 294. So keep that in mind with TGA. TGA, not extended, not an ad signal, made all the scans. Technically should be a 1.5% signal. Don't feel more comfortable putting more than 1% in it. So I decided to split it in the middle, and I'm putting 1.25% of my account capital into this stock, TGA. So then also CDMO, extended from the 20-day moving average, so it's risky. Limit order, 557. First cut loss level, 535. Second cut loss level, 528. Final cut loss level, 465. Now, I might go quarter, 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 and then a final quarter at the 50-day moving average. I don't know yet. I'm just letting you know what I'm going to do. I have to decide later on as the evening progresses what I'm going to do on a stock like this. Do I give it room in this kind of market? Do I not give it room? Do I reduce my position size even further? It's already down to 0.75%. It's up in the air. Then the next new long position, DDE. This one's got a bunch of issues. It's not only extended from the 20-day moving average, it's extended from the 10-day moving average. And then it also has earnings August 2nd before the market open. So super duper, triple duper, quadruple risky. I don't recommend anyone trading it. I'm only putting 0.375% of my account capital into this thing. I don't even know what that amount is. What is that? It's like right around like, I don't know. I don't even know what that is. Like 325, 325, 5 to 3.25. Not quite sure. Anyway, 0.375% of my account capital into DDE, limit order 304. First cut loss 274. Final cut loss 240. Please do not take this trade if you are new. Avoid, avoid, avoid. Like I said, it's going to be slightly over $1,250, but it's going to definitely be under $2,500. I'm not quite sure where that's ballparking it. For some odd reason, my brain's not doing the math really well right now. Not too smart, everyone. Just let you know. So just keep all that in mind. Avoid, avoid, avoid. And then the best looking chart, really like this chart. Very, very pretty. Too bad today's move is outside its normal ATR, making this buy risky. Too bad this signal wasn't coming yesterday following the previous day's pattern, so it wouldn't be as risky to that first cut loss. So as it is, outside ATR, it's an ad signal. So normally be 1.5, but it's only going to be 0.75. Then I'm going to reduce it to where I think I have like 700 shares. So I only want to add 350, half of whatever I have. So I think that's like 0.70%. But no matter what, limit order 995. First cut loss level that I'm using is right there, 915. Second cut loss is 885. Final cut loss for the ad signal, 860. But, you know, I've got stops going all the way back to here. So I'm just going to split them all up evenly amongst all those stops. All right, everyone, another long video lesson, but man, oh man, when the market's noisy, they're going to be long. I can't make them any shorter. All right, aloha.